Hi everyone, and welcome to the second session in the Bank of the Future webinar series. Today we have a great panel entitled The Future of Retail Banking Post-COVID-19. I'd like to introduce you to our moderator for the session, Mary Connor, who is the Director of Retail Banking Strategic Engagements and Global Sales Enablement at Finastra. Mary, I'd like to hand over to you to get things started. Whilst everyone turns their cameras and microphones back on, please can I just remind the audience that you can ask questions throughout the session and our panelists will do their best to answer them. Thanks. Mary, over to you.
Thank you very much, Emma, and good afternoon to everybody out there, wherever you are. And you're most welcome to this webinar on the future for retail banking post-COVID-19. Before I introduce the panel, just a little bit of backdrop to today's session. We all, in one way or another, have been impacted by COVID-19. And from a business perspective, in particular, the banking sector has been very impacted. It's a completely new way of working. People are home working. It's exposed operational shortcomings, it's fair to say. We've seen that from many banks that we work with. But it's also, I suppose, driven demand for greater digital capabilities. This is what we were seeing. And those digital capabilities are not only in the front end, they are actually right the way through the core to the back end to payments and across vertically and horizontally across analytics. Yeah. So what we're going to do in today's webinar is just talk about that impact of COVID-19 on retail banking and how our panelists see it driving the need for greater digital capabilities and also a greater need for cloud. So without further ado, I'm going to invite my panelists in to introduce themselves. So I'm going to start with, from bottom left on my screen, Abdullah, if you'd like to introduce yourself.
Hello, everybody. My name is Abdullah Mubarak. I work at NCB overseeing digital banking's retail platforms.
Thank you, Abdullah. And now to Stephen Monaghan.
Steve Monaghan, I'm Chief Digital Officer at Riyadh Bank.
Thank you, Stephen. And now to Ala.
Hi, everyone. This is Ala Al-Mashhadi. I'm the Chief Business Development Officer at the Saudi Credit Bureau, SEMA.
Thank you, Ala. And finally, last but not least, my colleague, Marwan.
Hello, everyone. My name is Marwan Abu Zaid. I lead the Retail Banking Solutions Consulting Team for the Middle East and African region at Finastra.
Well, we're delighted to have you all here, lovely panelists for today's session, which is focused on the Kingdom of Saudi Arabia. And like we said, how we see retail banking post-COVID-19, though I doubt it will be post-COVID. I think this is going to be an ongoing situation for longer than we'd like, but how we see things unfolding in the retail banking space. So I'm going to kick off the session with a question, and I'm going to start the ball rolling by just picking on individuals within the panel and getting their views on a variety of topics that are related to this webinar. So let's start with Ala, if you don't mind. What we'd like to know is, what changes have you seen these past 6 months in retail banking? And, what have you seen rising in importance? Yeah, if you could just talk us through some of your experiences. Thank you.
Excellent. Thanks a lot, Mary. I would like to first thank you all for hosting this panel and thank Finastra and Seamless to arranging this. The way that we are looking at it at SEMA is, of course, overlooking the whole retail market from three different aspects. We're looking from a new customer onboarding, so number of accounts that are there and the growth of number of accounts or decline. And then we're looking at credit balances, then we're looking at NPLs, non-performing loans. And we have a clear overview of the market when it comes to these numbers. There are two main figures I'll take you through right now. So one is Q1 of this year versus Q2 of this year. So what has happened, let's say, after we're getting back to normal in comparison to the couple of months that were quite dead. Now I know that COVID we started to see the impact more aggressively starting from March, but at least these numbers would give us quite an indication. And then the other indicator is year to year. So what has happened Q2 of this year in comparison to Q2 of last year. So when it comes to number of accounts, we haven't seen any growth quarter to quarter of 2020 of this year. It mainly stayed constant, but what we've seen is that there's a growth of 8% when it comes to year over year. Now, we will know that by the end of the story that there are many aspects that led to these growth, whether in number of accounts or more importantly, as we will see, balances. So balances, the loans that were taken out. When we're looking at balances today, we're sitting at around 750 billion balances of loans. And what we've seen is that there was quite a considerable growth on the annual outlook, which is around 27%. Quarter to quarter, still a considerable growth, which is around 5%. But where was the growth basically coming from? The growth was basically coming from mortgages. So if we look at, my colleague bankers over here would know, and you yourselves probably would know about the Saudi market and what's happening over here, is that mortgages was the name of the game for the last 12 months. And it was the main driver of growth for balances. So when we talk about the 8% that was grown over the last 12 months in terms of number of customers, these 8% contributed to 27% of growth in terms of balances. And why is this huge growth? Is because of mortgages. But what came with this growth is also a rise in NPLs, obviously, right? So NPLs grew by almost 35% for year-over-year outlook, and 23% for the last 3 months. Now there are reasons why mortgages has grown. One is because of the government initiatives that are working over there. Two is because of the introduction of the increase in VAT, which led people to execute mortgage loans, which are the main important and most expensive loans before the implementation date. Now, what we've seen, probably it could be an indicator on the impacts of COVID, is an increase in NPLs by 13% on personal loans as well. So, but that 13% could have been probably much higher if the government or SAMA did not intervene through either rescheduling or payment holidays. So this is just a quick overview and outlook on what has happened historically in the last 3 months and the last 12 months.
Okay, thank you very much, Ala. Just let me go over to Abdullah for a moment, and just let me ask about how he sees what you've just said. Is there a correlation with what he's seeing from NCB's perspective in the marketplace?
Absolutely. So first of all, a pleasure to see you all virtually and to see the kind of my colleague panelists and listening to Ala's great views here. So I can echo a lot of the sentiment that maybe my colleagues from SIMA has experienced. The impact of COVID has been very much nuanced. So there are certain areas, I'm talking maybe about the banking industry and probably several industries at large. So in certain pockets, you've seen accelerated growth. In certain pockets, actually, you see maybe slower kind of pickup. And in certain areas, it's stagnant. And I'll give an example maybe on each. So if you look at an example of mortgages, quite a bit of pickup, but was kind of primarily led by regulatory shift as well as consumer demand and certain product offerings in the market that are attractive. The VAT very much helped kind of maybe front load part of the year towards Q1 rather than stretching it out throughout the year. From a digital banking standpoint, it's quite interesting. So in the areas where there is supply in the form of functionality, we've seen quite a bit of pickup. However, there are certain areas where we've seen customer demand, but the market is trying to catch up to serve customers in the medium that they are kind of shifting towards. Maybe I'll touch on this topic in a bit, but just very quickly highlighting some of the changes that really helped our journey in digital throughout the past, I would say, quarter or so. The introduction of several regulatory changes, particularly to support end-to-end digitalization, which is basically the name of the game, I believe, to win this COVID wave. Regulatory changes and innovations such as e-signature, where banks are now allowed and users are allowed to complete their signature without visiting the branch, so we can execute a permission note or what have you. In areas such as, I will say, online account opening, we'll give an example. We've seen quite a bit of success in online account opening over the past 18 months. However, COVID had a mixed kind of impact on online account opening. So we've seen a run rate that has been quite solid over the past, I would say, 18 months. During COVID, however, we've seen a slower pace in account opening, which is a bit counterintuitive. But when we looked at kind of the data, we realized that losing a big referral, if you will, network, which is the branch, has a negative impact on digital onboarding. Yeah. So it's quite nuanced across the board.
So in some ways, Abdullah, thank you for that. And that was very insightful, actually. I hadn't thought about that, and the branch has not been available for business, and then they have to go online, and so it's a slower process because there's an upskilling involved in that. So that's part of the whole digitalization, so which we'll probably see ramping up as banks, I suppose, reprioritize, I would think, over the coming months. And just on that topic, and I'm going to go over to Marwan now just to talk about what he has encountered in his day-to-day role, thinking about digitalization and thinking about the use of analytics to create a better user experience, and maybe in doing so, making it more magnetic, more sticky for your customers to go online. So Marwan, over to you. What's been your experience?
Yeah, thanks, Mary. So from the Finastra perspective as a solutions vendor, we've seen obviously quite a bit of interest around digital revamps, if you will, digital transformation projects within banks that want to address some of these changes in customer behaviors, and obviously a need for alternative channels besides the traditional branches. We've also seen quite a bit of interest around SME lending. And my guess is around the regulatory changes that are taking place in Saudi Arabia that has driven some new entities to start popping up that are going to be focusing on the SME lending space, microfinancing, and obviously for these kind of smaller organizations to remain competitive, there's obviously a genuine need for a lot of automation within their processes. Going back to the point around analytics, and I'm sure you're going to get the insights from our fellow panelists, from a Finastra perspective, we've seen an obvious uptake in terms of interest around adoption of analytics. And with any global crisis, there's a need to understand the data quite heavily. And it's not only about understanding the data in a fancy manner by displaying it in dashboards or reports, but it's also the need to incorporate some sort of intelligence around that data. So predictive analytics has also been something that has been generating quite a bit of interest, to be able to understand customers' behavior and also predict what's coming in the future. Like Mr. Ala said, the non-performing loans, that increase of 13% that has taken place, how can you accommodate that? How can you maneuver your way around it and better predict it from an accounting perspective, but also from addressing the customer's needs? So all in all, I think analytics is going to take a big role in the next few months to be able to work our way around the changes in customer behavior and modifications of their practices from a banking perspective.
And funnily enough, and I think Marwan will know this firsthand because you've just talked about non-performing loans. When we launched our analytics solution a few months back, which leverages the power of AI and ML, one of the first questions when we went into a bank asked was, can I have a dashboard on non-performing loans? That is absolutely true. And the second bank, it was the same question. So that's interesting alignment with what you're seeing in the market in Saudi. I'm just going to go over to Stephen on this question as well, as about how he sees the importance of data from Riyadh Bank perspective.
Yeah, sure. I think the right starting point is probably actually not to talk about the data, but the customer. I think, if you look at the impact of COVID, the early warning signals actually started out of China long before it became a problem in the Middle East or anywhere. And I think one of the startling statistics that came across was there was something like 10 million SMEs facing the prospect of going bankrupt in China. The implication of that very early on, that was back in February, was that would broaden around the world with tremendous speed, because just the simple data within China was giving very much early warning signals as to what might happen around the world in terms of exponential growth. Interestingly, if you think about what that means for people, we were dealing with something that in the technology world is a standard. Exponential growth is what we're used to, and we're used to reacting to it. But for the public at large, this was really a new experience. And, if we look at the impact of that, you're talking about the potential for job loss, the potential for, of course, bad credit from a banking perspective, but, from a human perspective, families disrupted, loss of life, a whole range of different issues. So our first thought, we've got quite a sophisticated data and analytics approach at Riyadh Bank. Our first thought was, how do we use the information that we have available to us to actually protect customers? How do we stop SMEs going bankrupt? How do we help them get access to markets, etc.? So I thought that was very different to running to work out immediately how much was at risk. Because if you can prevent rather than cure later, that's obviously a far preferable outcome for managing that risk. As markets evolved over that period of time during COVID, and the impact on customer experience, I think that, our philosophy always from a CX standpoint is simplicity outside, intelligence inside, and embedded everywhere. So it's kind of inherent that we try and look at how we use data and intelligence first for the customer and then for ourselves. And I think if you empower customers with information, you're in a position to then reciprocate and empower yourself. So we really focused in on that from a data and intelligence standpoint. Of course, we ran the risk numbers. I think JP Morgan released some very interesting statistics on that. I think in the US, the average SME cash balance was 27 days. We, within a day, had run those numbers for Saudi very early. I think this was in the February timeframe. And let's just say that Saudi was not quite as cashed up as the US. So we realized the magnitude of the problem, and I think the important thing was that, how do we use that information? That immediately translated for us into action in terms of programs, translated that in terms of working out how we can best support our customers. And again, if you look at the rush towards digital, as it was stated earlier by my panelists, there's a learning curve, and that adoption learning curve, of course, was clear to predict, but also clear to understand in terms of what would be fairly massive adoption during that time, because simply no one had choice. So data and analytics plays a very huge part, and I think one of the key things that we look at is, if you think of customer experience, you want to create an experience, some level of emotional engagement, but then there's two other things that are critically important. One is to make things simple and easy. Simple's cognitive. People think simple and easy are the same, but simple's cognitive and ease is effort. So we use data and intelligence to look at how we can make decision-making simpler for our customers, and then how we can automate or ease them through process to ensure that we can connect those decisions. And if we look at it from a standpoint of risk, information is a direct substitute for risk. So the better informed we can make our customers and the better that we can use data to inform ourselves, that's a clear substitute for risk. And I think that that dynamic and also using technology for what it's best for to arbitrage time, if you can make that happen sooner than your competitors, you're kind of living in their future. And I think that, you know, for us, data intelligence and the way that that flows out to customer experience sits at the very heart of what we do as a bank.
Thank you for that, Stephen. Yeah, and I couldn't agree with you more on those points, because the customer experience is key. It's well-known fact, happy customers buy more, no matter what the industry is. It's the same, you know, ethos. And just on that point, because delivering a good customer experience is partially also predicated upon the banking operations that are like the behind the scenes, you know, in a theatre or something, that are beavering away in the background to deliver on that good customer experience, you know, whether it's direct to customers, support or otherwise. So I'm going to go over to Abdullah now and just ask him, what has he seen in terms of the impact on banking operations? So COVID has meant remote working. How has that impacted on your banking operations?
Yeah, so I think you have kind of different segments within the bank that had been impacted differently. So if you look at purely, for example, the branches, it's very difficult to have a remote setup from the get-go. If you look at, for example, let's say the digital banking team, it's kind of very much easy to have a remote working setup. In certain areas, it was kind of more about, it's very much native towards the medium. However, we need to really catch up in terms of building up the infrastructure, which, for example, centralized sales, where you have colleagues centralized in a certain area and perform outbound sales activities. So overall, I think the impact has been most visible on the branch network. The rest has been, I would say, like maybe the rest of the world kind of quickly catched up to kind of the new normal. Look at us today, we're having a panel on virtually, and I believe maybe most of the meetings that we conduct today is virtual, which is pretty interesting if you really zoom back and maybe building on a comment Steve made. If you really look at the impact of COVID generally, if I want to distill it in one sentence, from kind of, if you want an economical perspective or user perspective, it really accelerated the business case of digital, right? However, what needs to follow that is really having the supply and demand met. So we have a lot of users now either ready, because kind of there is a shift in behavior, or forced to use digital. And I believe the game now is everybody's catching up to supply that demand digitally. If you look at the impact of COVID in the short run, there isn't much impact economically in the short run. In the medium run, the long run, the impact is very clear, right? So the points that my colleague Stefan mentioned, as well as Ala, there is impact. But in the short run, the disruption that happened, in my assessment, was purely because there was a disconnect between supply and demand. People wanted to purchase online, whether it's electronics, loans, food, if you will, but the supply is not there yet, right? And a part of it is, to your point, kind of organizations are kind of catching up with their digital and technology capability, as well as learning how to serve our customers in a remote setup, which is primarily doubling down on digital. So I think overall, I believe the market, as well as the industry, which is kind of the banking industry, is really catching up rather nicely in many kind of pockets of kind of jobs or tasks to remote work. There are certain areas that I believe will remain to be challenged until kind of a digital alternative is provided.
Yeah, and I think, well, from what I've seen, that's absolutely true. I think, you know, there's the front of house stuff, which is the digital channels. I call it the front of house. You know, it's the meet and greet place really of your bank. But then going back in, if that was a restaurant, you know, you'd have your front of house person, but back in the kitchens, behind the scenes, there's a bit of scrambling going around. So thinking about, you know, I know for a fact, having worked in this industry, there's a lot of banks still have a lot of manual processes in the background. And, you know, I can imagine they are very difficult to manage in this remote working environment. And what we have seen is a move towards digitalizing those processes to remove risk, to remove the security risk as much as the operational risk of those elements. And we feel that that may realign banks' priorities. So I'm actually going to go over to Alan now and just ask him about that very topic. You know, has COVID had an impact in terms of priorities, technologies, priorities for banks? And what are you seeing, Alan?
Right. So this is, there are two ways as well. There's us internally, so looking inwards, and us being a supplier to banks of data and technology today, and what we're seeing today with banks. So just a quick comment on what my fellow panelists also referred to, and which is the high dependency on branch networks. And we've seen that very much vividly, because during the COVID period, we've seen that number of inquiries, so number of transactions. So the way that we work at the Bureau, that any single person who wants to apply for any kind of loan, the bank should inquire the Bureau. We've seen number of inquiries drop by around 70%. So it means that everything went into halt. And if we have had the digital infrastructure in place, we would have seen that number probably only dropping to 20 or 30%, and people still continuing to do their transactions. Now, of course, part of that is consumer awareness. It's uncertain times. Let me refrain from taking a loan. But 70% is quite a significant number, which leads to the actions that are being taken right now, and we're seeing around the banks. So let me jump in without looking inwards at SEMA. Let me look in what we're doing today with the banks. So today we're seeing that there's a much higher utilization of data for the purpose of analytics and getting out information. Now, the banks, what do they need to do? The retail banks need to continue, one, selling, two, reducing risk. So these are the two elements that still needs to continue working. And the way for that to continue working is to look within your portfolios and find gaps of opportunities, whether you want to sell more or whether you want to collect better. And we're seeing a increase now, of course, during the 2 months of COVID themselves, banks were really looking internally and not looking to getting anything at that moment, because they were trying to put their position in a better shape. And even us at SEMA, everybody was looking internally, how can I sustain? And if this goes longer, what do I need to do? Now, thankfully, things are getting back to normal right now, or let's say the new normal. And banks are talking to suppliers, vendors, companies that can provide them with technology or with data in order to enhance their capabilities to better service their customers. Now, by us looking internally, or let me, Ala, look internally at SEMA, what we can see is our digital journey has also accelerated. So we are going to launch a new digital platform, because currently we have over 15.5 million customers, individual customers within our database that need to look into their credit scoring, need to look into their credit performance. And we are migrating from our old version to a much newer version that is agile, that provides information, that provides As my colleagues also said, it provides information for the customers, for them to know what decision to take before even going to a bank, which is also would ease the journey at the bank's end. So these are the digital journeys that we are seeing, whether internally or with the banks, that are being currently accelerated.
Okay, so just speaking on that point about the digital journeys being accelerated, and I'm very mindful about the impact on the branch network of COVID itself, but also, and I'm going to go over to Abdullah on this, just to talk about the regulation, the impact of regulation in that respect. And I mean, is this going to change things in respect to cloud? So, I mean, let's talk about it generally first. You know, how has regulation helped or hindered the market in Saudi? And then let's talk about it just from the cloud aspect, what you're seeing. Thank you.
Absolutely. So maybe kind of set a bit of context on the topic, kind of as part of the the Vision 2030 program. There is a subset of a program called Financial Sector Development Program. Within that program, there is multiple kind of key strategic aspirations that very much pushes and enables the industry to move at quite a bit of speed towards digitization. Now, with that infrastructure in place, when COVID came kind of surprised everybody. There is no manual that came with COVID, right? So it came and everybody is like, good luck. So there was this kind of program that's set in place that was accelerated, and I believe it really kind of helped the banking industry adapt to serve their customer needs. And I'll give a few examples. A very maybe clear example and kind of touches everybody's life would be cashless. Just the amount of volume that has been moved from cash to cashless, being Apple Pay based mobile payment, or NFC, which is kind of more convenient for the user and also more safe from a hygienic perspective. You kind of see quite a bit of a movement there, driven by two factors, I would say: change in consumer demand as well as change in regulations. A very simple example there is the allowance of NFC payments have moved by, I think, 4x without a PIN. So a customer or a user would not need to enter or can purchase up to around 300 riyals, if I remember correctly, up from 100 riyals just by a tap. That in of itself really moved things forward. That's on the payment side. On the lending side, which is kind of the bread and butter, if you will, of the banking industry, the introduction of e-signature that would help us really digitize our offerings end to end and help users and customers perform their transactions remotely, has been introduced during the kind of lockdown period, which I believe is quite transformational. The amount of innovation that we can build on this regulatory innovation is quite wide to serve our customer, also to reduce our overhead in terms of cost. Maybe kind of another example in a different field, just kind of the amount of fees, if you will, that was charged to the customer on digital platforms completely waived to help customers really execute their transactions at ease. I believe these are kind of one of the flagship regulatory innovations or changes that happened within COVID that really helped us innovate and accelerate kind of our digital agenda forward. Now, on the topic of the cloud, I think it's a very interesting and exciting topic. If you really take a step back and say 10 years out or 20 years out, is the cloud a reality? I think nobody would dispute that, right? It's going to be kind of a basic utility that everybody uses across the industries. But the way I like to think about it is today, what problem are we solving and what opportunities do we have to solve that problem, and what partners? And I'll give an example. the great partners such as SIMA, as well as Al-Ilm. So let's take credit scoring, or let's take KYC, or online account opening. Three very important activities or problems that we want to solve and digitize. I would imagine if we were in a European setup or a US setup, you would look for third-party providers that leverage cloud hosting kind of technologies, and they would give you kind of a mixed bag in terms of performance and, if you will, reliability. I'll expand on one example here, which is, for example, online account opening, and kind of contrasted to a cloud solution that is provided in Europe and the US. So if you look at one of the leading banks or digital banks such as Revolut or N26, what they leverage for ID authentication is document upload. So you scan your document or your ID. There is some cloud computing that happens in the background in the form of AI and what have you to recognize and verify the ID, and then you proceed to opening your account. The solution that's provided here, driven by kind of the regulatory innovation, if you will, or RegTech that's happening within Saudi Arabia, is direct integration through providers such as Tahakkum or Abshir, where we can tap directly into the database securely of the Ministry of Interior, and we can verify users in a much more accurate way, secure way, and a faster way without the need of using cloud hosting. So maybe just in summary, I believe cloud hosting is a key kind of piece of infrastructure and utility that will continue to pick up and will to be inevitable in the next, I would say, 10 to 20 years. Nobody would dispute that. But for what I try to solve for is we have problems, kind of statements they want to solve for and digitize. And what we found that there is a lot of offerings that are native and high, kind of much has a better customer experience, as well as highly more secure, and if you will, has that data accuracy that you look for without the need to go to the cloud. So I think in the interim, things are going quite. My assessment in the interim, the solution that we have today is much more advanced than what a cloud hosting, if you will, vendor would provide, particularly, for example, in eKYC and online account opening. But I believe going forward, kind of managing risk in cloud hosting would be a key kind of consideration.
Okay, so let me just go over to Steve Monaghan on this and get his views also from the Riyadh Bank side about cloud and cloud adoption, where he sees it going. Yeah. Thanks, Steve.
Right. Well, I remember being in DBS in Singapore when the MAS was saying cloud's a no-go zone and arguing. I won't make that argument here. I think Summer's doing all the right things in progressing. But look, cloud very simply is just a reflection of digital economics. Your ability to marginally scale without much planning. Your time to scale is very slow, very fast. It makes up for a lot of inefficiency that you have internally if you're not optimized as a tech shop. So cloud has numerous advantages. Your customers are out there connected to cloud. You not being part of that is makes it a bigger challenge. But the reality is, with the level of connectivity that exists today, anything that's possible in cloud, you pretty much have the same capability of delivering internally. It's just really a question of the efficiency with which you manage it and how that reflects in the digital economics.
Okay, so if I said to you, for example, what we see within Finastra, and I'm going to ask Marwan to comment on this too, is that we see that a lot of fintechs coming to market, with really excellent capabilities using AI and ML, but those solutions are only going to be available, can only be consumed via the cloud. So how to manage that? It's always a hybrid situation. You're not putting your beating heart into the cloud, but you may want to consume other apps via the cloud. How do you see that panning out then?
Look, there's certainly advantages, and what really drives that whole model is marginal cost, because your startups aren't, consuming fixed assets, and so therefore they're using low cost infrastructure to manage that process.
Mm-hmm.
So there is obviously huge advantages in connectivity. The cloud simplifies adoption and gives you access to a much broader range than those that might be available. But many of the best AI and services vendors can do on-prem as easily as they can do on cloud. I mean, that's just the simple reality. It's a question of the ease of implementation and the speed of implementation and time to value. So, I don't think it necessarily stops you. It just inhibits the speed of forward progress, and everything in digital requires you, really managing time to value, time to quality, and time to scale.
Yeah, and I would agree with you. They can do both, but if you talk to them, a lot of them only want to do it. The only way is cloud for them. That's how they see it, but they will do it.
having built 6 startups, and the last one was an AI play, we could do cloud just as easily as we could do on-prem.
Yeah.
It just took longer and was more resource
Exactly.
intensive. And it just means that you're paying the premium for that. So
yeah. And Marwan, would you like to contribute anything to this dialogue?
Yeah, I mean, if we look at it from the perspective of a solutions vendor like Finastra, being exposed to multiple types of opportunities, I would kind of agree with Stephen on one point and disagree on another. We've seen more traction in terms of demand for cloud adoption from startups, from newly established banks, from new financial institutions that really want to scale up as the demand grows and want to go to market as quickly as possible. So definitely there is this need for outsourcing infrastructure, but also outsourcing the management of software to a third party and letting the financial institution focus on the business. So if we compare that to established banks, yes, their maturity and their ability to really focus on their infrastructure and scale it up quite quickly really limits them from considering cloud as an alternative at this stage. So if we compare the two types of institutions, we've seen high demand from newly established digital banks, smaller institutions that are looking to go to market very quickly. The RegTech revolution, like Ala mentioned, is something that we're very fond of in Saudi Arabia. The number of technology solutions that are allowing banks to be able to integrate seamlessly really is taking a step up from a lot of other countries, which makes it easier for a cloud sandbox to be initiated with all these solutions pre-integrated, allowing for a complete digital experience from start to finish. So Qawa'im, Ilm, Sima, Bayan, all these institutions that are now exposing their services as APIs makes bringing up a sandbox in the cloud, integrating to all these solutions much easier than in other countries. Now the regulation, and I'll let the panelists comment on SAMA's regulations and how they're going to maybe change in the future, is what we've seen is we're looking at local players that are kind of taking that role of a public cloud provider like Microsoft Azure or Google Cloud or AWS. Telco providers, for example, they are now assuming that role to be able to make sure that they're checking the box around compliance and data residency, but also giving those smaller institutions an alternative for a cloud-based solution.
May I have a right of response on the disagreement?
Sure.
Certainly, of course you can.
The banks focus on bank business. I mean, what bank isn't a technology company today? And if it isn't, it should be. If you have a look at JP Morgan, Goldman, everyone building technology as a core competence. DBS, where I used to, technology is a core competence. It's a 27,000 person startup, as the CEO refers to it. So, I think there's a great opportunity to augment with the creativity of the market, and cloud accelerates that, but it doesn't necessarily replace it, and it doesn't necessarily force you into an either or scenario.
Yeah, absolutely. It is definitely not an either scenario. It's just an alternative that some
Yeah,
financial
sure.
try to go through that path to eliminate some of the costs and worries, if you will, around managing the infrastructure.
Don't get me wrong, I'm a huge fan of cloud, but
So mine.
you operate within the rules of the country, right?
And
I
actually,
think I'll jump in and just put a few comments over here. So commenting on, so agreeing with Abdullah basically on the way that these digital platforms or API connections that are there, whether Ilm, Sima, and others are available in order to ease the process. Some of the things that we're doing, and this is probably some let's say key information that isn't really public yet, but it's good for this panel and your viewers to know about as well, is that Sima is running the new national eKYC platform. So this is a new platform run by Sima in order to run the full automation of eKYC. So when we talk about KYC currently, there are two parts. There's the onboarding part, which is getting the digital identity of Ala through Ilm, and then the full-length KYC part, which is going and taking Ala into the PEP list and checking him into different sanction lists and then clearing him out and then onboarding him. So that is the full journey that we are trying to have it within Sima. Another thing that we are trying also, because probably another information that not everybody knows, is that Sima is owned by the banks. So basically when we originally started, we started to build this credit bureau in order to help the banks reduce risk. But now what we're doing is we are introducing more and more technology that we are seeing that the banks are needing in order to help them within the execution. So another thing is that we are going to be providing salary certificates on our digital platform within our own reports without introducing any new connections for both the public sector and the private sector. And for banks, this is a huge thing, because currently there's only one sector that's providing electronically at quite a considerable high price, and the other is still undergoing development. And what the banks need, they need certain key information. They need the ID on a digital information. They need the salary that is verified on, preferably on a digital information. And then they would need the credit report, and then they would take a decision. If you provide all these three, then the full journey could be automated. With the exception of mortgages, because there is quite a lengthy process, a manual process that hopefully is going to be automated as well. Finally, on cloud. So as we all know, the growth of cloud mainly comes from SMEs, because these are the companies that just started. And the main difference over here is, instead of putting in capex, I would rather hold my capital and run it through opex. And we've seen huge growth on all our Sima's cloud services, whether it was loan origination, decisioning, or collection. We've seen huge growth, especially with new fintechs that are coming into the market, and with startups and digital banks that are also coming into the market. But what is also key is that we are seeing the adoption of our cloud solutions from both big banks and government institutions. So today, one of the biggest government institutions that is dealing with consumers and hundreds of thousands of transactions per day is using Sima Cloud. And this tells you that sometimes they don't want to run into the headache of having something on-prem and maintaining it and dealing with it and upgrading it. I'll just connect with me APIs and just give me the decision. Let me care about the rest. I'm the front end, and you can do the back end.
So thanks for that, Ala. We're moving into the final stages of the sessions now, and I know we've got a few questions, but just before we go over to those questions, what I'd like to do is just do a quick run around about, I mean, we're talking here about the future for retail banking post-COVID, so looking into your crystal ball, essentially, how do you see the banking market and banking itself evolving over the next, let's say, 12 months? I realize it's a difficult prediction given the, I suppose, the roller coaster that has been COVID, you know, lockdown, no lockdown, you know, more lockdown, more restrictive lockdown, etc. Yeah. So if I just start with you, Abdullah, and then we'll just go around the table, as it were.
Absolutely. So I think it's going to be an exciting kind of evolution after COVID. I believe digitization will accelerate, driven again by the consumer behavior change as well as regulatory change. So the obvious things I think would happen. So whatever you can do offline, you will be enabled to do online. But that's just the beginning. When that happens, that's the beginning of the journey, not the end. And I'll just give one example, a parallel. I think we have an Apple event in a couple of days, and they always kind of show us that we're always in day one in kind of technology. We're just yet, we move away from that just yet. So if we look at, for example, Apple Car Key, right? So you'd imagine if you digitize it, you enable users or customers to open their car. But in reality, when you move it to digital, you can really expand it to a new kind of realm where nobody can imagine. You can have a temporary key, you can have a key with a speed limit, and what have you. So I believe what I predict is just about any kind of service that is provided offline will be provided online. But that's just the beginning. Innovation starts from there, doesn't end from there.
Okay, so moving around the table to you, Ala, maybe you just comment on what you see the coming 12 months bringing.
Right. So the problem, as you said, the prediction is very, very difficult because if we take things as it is right now and moving through the status quo, meaning that this is our new normal and there isn't a second wave. Because if there's a second wave, all of what we're saying probably is still going to be challenged. But still the challenge is there, because what we are seeing, that the positive thing is that banks are moving into digitization, right? And things are really moving into the right direction, and we're happy about it. And we are enabling banks into that journey as well. The kind of challenging things is growing that portfolio, right? So still we are seeing that the economy is being challenged. Jobs are being challenged. New employment is being challenged. And that is where basically retail portfolio growth is coming from. It's coming from new employees that are coming into the market. It is coming from salary increases of current customers that are currently banking with these customers. And it came from mortgages. Now, one of the questions I've seen on this as well is that what if government support stops for mortgages? Now, government support was the main driver of the mortgage portfolio growth. The extra boost that they had last quarter was VAT. Other than that, these are the two main elements. But I don't think that a real estate development fund was operating and will continue operating. There has nothing is changing. I don't foresee that REDF's support to individuals is going to stop. It's going to continue as is, and it's going to be the main driver. Probably some of MOH, Ministry of Housing's initiatives, are going to be probably reduced the way I see it, because they've done quite a lot during the last 2 years, and they need to see those initiatives go into play. So probably new initiatives would considerably shrink a bit. But REDF, which is the main supporter of these new loans, is going to continue. Probably the trend is not going to be the same, because customers do not want to pay the additional VAT, but you'll still people want to live. So
exactly. So over to Steve. Bearing in mind we have a few questions, so just a few words from you, Steve. on what you see?
Sure. I think that
Yeah.
I've never seen adoption of technology reverse. So, once people have gone through the effort of going through digital adoption, it's very unlikely they'll return to a previous behavior. Unadoption rates would probably be 0.0001%. From grandparents to kids, the moment they learn a technology, they never get beyond it, right?
That's it.
So, so I think that digital is going to have an ongoing impact regardless of what happens with COVID. And I think that, this has been a huge acceleration in terms of adoption, and that adoption will not be unadopted.
Thank you for that. And we have 3 questions. So I'm just going to see if you can do a 1-minute answer each on these 3 questions. So the first question is from Abdul Rahman, and it says, buy now, pay later apps, is it considered as a threat for traditional retail banking? So maybe I'll ask that of you, Steve, in the first instance.
Look, competition is part of the market. This is a new form of competition. There are banks that are doing some pretty interesting models of their own around the world. So I think that this is just like all digital progress, challenging for new opportunities.
Thanks. And the second question is from Mukhanad. And it's about the mortgage market, but I think we've covered that fairly comprehensively already in this discussion. I'll just read it out, but I believe we have. With high dependency on the mortgage market in Saudi Arabia, are we heading towards a similar position of that of 2008? Currently, government support is maintaining the market, but what happens once that stops? So I think already Allah has answered that very nicely in his previous question. And then the final question comes from Saeed Jaffer. What I understand is that after the event of COVID-19, banks focus on improving customer experience and digitalization. That will, I think, definitely help increase the number of transactions. There is one more area which might need focus, and that is the burden on the operations team and banks to process NPLs and loan rescheduling. Do the participants think fintech can help in this area? I think we answered that really earlier on in the conversation. Maybe Marwan, you'd just like to comment on that as a closing item.
Yeah, I mean, I think obviously technology is very important to be a driving force in resolving some of these issues. It's not only about being digital at the front end, but also being digital in your back end processes, and how can you figure out how to automate all of these things, and also using analytics, like we said, to be able to detect potentials for non-performing and figure out ways to accommodate customers' behavior and customers' position through early detection of potential rescheduling or modified products that can be suggested using technology such as AI. So in short, automation of the operation and being able to predict using smart analytics.
Yeah. Thanks very much, Marwan. So we're actually at the close now, but I just, I think I wanted to kind of sum it up. I think what we're hearing is that cloud is a longer term aspiration. It's not essential. Most banks can do whatever they want on premise as is, but cloud will definitely come at some point. Digitalization capabilities, definitely a focus on that, and sharpening up the digital capabilities, ultimately with the customer in mind. We had a lovely insight there into the mortgage market and the NPLs within Saudi Arabia, which personally I found very interesting to see that, and just to hear how the government is actually working with the banking market in that respect. So, gentlemen, I just want to say to you all, thank you very, very much for your time. This was a lovely interactive session and we appreciate it very much, and I wish you well for the rest of your day. Thank you.
Thank you very much.
Thanks a lot.
It was a pleasure.
Thank you very much.
Bye.
Bye.
Thanks everyone, and thanks to the audience for dialing in. It was a really great session and I hope you all enjoyed it. Thank you again.
Thanks.